Welcome back to the Deep Dive, everybody. Today we're tackling a topic that's super important to a lot of families out there. Financial planning for those with special needs. It's all about creating a secure future, right?
Right.
Making sure your loved ones have what they need when they need it.
Absolutely. And it can feel overwhelming, for sure. There are so many things to think about, so many moving pieces.
Right. It's not your typical, retirement planning conversation.
Not at all. You have to factor in things like government benefits, long-term care, maybe even specialized therapies. It's a whole different ballgame.
And that's exactly why we're doing this deep dive. We're going to break down some of the key strategies and financial tools that can help families like yours navigate this complex world.
Exactly. And we'll share some real-world examples along the way so you can see how these concepts play out in practice.
Perfect. So where do we even begin?
Well, the cornerstone of any special needs financial plan is usually a special needs trust, or SNT for short.
Okay, SNTs. I've heard of them,
Mm.
but honestly, they kind of make my head spin. Can we unpack that a bit?
Sure. Think of an S&T as a protected account, specifically designed to hold and manage assets for someone with a disability.
Okay, that makes sense. But why is that so important? Couldn't you just, set up a regular trust?
You could, but here's the key difference. An S&T is structured to preserve the beneficiary's eligibility for crucial government benefits, like Medicaid and SSI.
Oh, I see. So we're talking about things like healthcare coverage, financial assistance, right?
Exactly. These programs often have strict asset limits,
Ah.
but if the assets are held in a properly drafted S&T, they don't count towards those limits.
So someone could have money set aside in a trust and still qualify for those programs. That seems almost too good to be true.
It's a powerful tool. But like with any legal or financial instrument, there are nuances, things to be aware of. That's why working with an expert who really understands this stuff is critical.
Absolutely. I bet there are a lot of different types of S&Ts too, right? What are the main ones that families should know about?
Right. You have your first-party S&Ts. Those are funded by the beneficiary's own assets, like an inheritance maybe, or a personal injury settlement.
Yeah.
And then you have third-party S&Ts. These are funded by someone else, like a parent, grandparent, anyone other than the beneficiary themselves.
Okay, so the type of trust you choose kind of depends on where the money's coming from. That makes sense.
Yeah.
But are there any downsides or risks to using S&Ts? Anything families should watch out for?
Well, one thing to keep in mind with first-party S&Ts is that Medicaid might have a claim on the assets after the beneficiary passes away.
Wait, really? What do you mean by that?
It's basically to recover the costs of care that Medicaid provided during the person's lifetime. So let's say Medicaid paid for years of medical treatment and support services. After the beneficiary passes, Medicaid might try to recoup some of those costs from the S&T.
Oh, wow. I didn't realize that. So is that something that applies to third-party S&Ts as well?
Not usually. With third-party S&T, those assets typically go to other designated beneficiaries after the person with special needs passes away, as specified in the trust document.
Okay, that's good to know. I'm definitely starting to see why having an experienced professional guide you through this process is so important. There's a lot to consider.
For sure. It's all about making sure the trust is set up correctly to meet the specific needs of the individual and the family. And speaking of setting things up correctly, another crucial piece of the puzzle is making sure that S&T is funded.
Right, because a trust is great, but if there's no money in it, it's not going to do much good. So how do families typically fund these trusts?
There are a few different approaches. One common one is using life insurance. Think of it as a safety net for the safety net.
I like that. A safety net for the safety net. Okay, so if something happens to the parents or whoever's managing the trust.
Exactly. You want to make sure the trust has the resources to continue supporting the beneficiary. And that's where permanent life insurance comes in.
Okay, permanent life insurance. Remind me again, what makes it different from term life insurance?
So term life insurance is it's temporary coverage. It's for a specific period of time. But permanent life insurance, like whole life or universal life, it provides lifelong coverage and builds cash value over time.
Got it. So it's more like an investment too.
In a way, yeah. And that cash value can be accessed, if needed, for things like, covering unexpected expenses. But the main benefit is that death benefit.
Right. The payout that goes to the trust when the insured person passes away. So even if, let's say, both parents pass away unexpectedly, the trust is still funded and can continue to support their child. That's really reassuring.
Absolutely. It offers a lot of peace of mind. And there's another type of life insurance that's often used in special needs planning called survivorship life insurance.
Survivorship life insurance. I'm not
Yeah.
familiar with that one.
It's also sometimes called second to die insurance. Basically, it covers two people, usually the parents, and it pays out only after both of them have passed away.
Oh, I see. So it's like ensuring that the trust will be funded no matter what.
Exactly. And it's often more affordable than buying two separate individual policies.
That makes sense. So we've talked about trusts and life insurance. What other financial tools are commonly used in special needs planning?
Well, another one that can be really helpful is annuities.
Annuities. Really? I always thought those were just for, retirement income.
You're right, they're often associated with retirement, but they can actually play a vital role in special needs planning, too.
Okay, I'm intrigued. Tell me more.
So imagine being able to create a steady, predictable stream of income for the SNT, kind of like a regular paycheck.
Oh, so instead of just having a lump sum in the trust, you're creating a guaranteed income source.
Exactly. That can be used to cover ongoing expenses like housing costs, medical bills, even those specialized therapies we were talking about earlier.
Wow, I never thought of it that way. That could make a huge difference in someone's quality of life, having that consistent income coming in.
Absolutely. And here's where it gets really interesting. Certain annuities are actually designed to be Medicaid compliant.
Medicaid compliant, what does that mean exactly?
It means that the income generated by the annuity won't affect the beneficiary's eligibility for Medicaid.
Oh, wow. So you can have that steady income stream without jeopardizing those essential benefits.
Exactly. It's a really valuable tool for ensuring long-term financial security.
Man, this is all so fascinating. But I have to admit, it's a lot to take in.
It definitely is. It's a specialized area of financial planning with a lot of complexities.
So for families out there who are just starting to think about this stuff, what's the most important piece of advice you'd give them? Where should they even begin?
Honestly, my number one piece of advice would be don't go it alone. Seek out guidance from professionals who specialize in special needs planning.
Right, because it's not just about, picking the right investments or something. It's about understanding all these legal and financial nuances.
Exactly. And making sure that the plan is tailored to the individual's unique needs and circumstances. A qualified professional can help you navigate all of that.
Awesome advice. So as we wrap up this deep dive, what's the one key takeaway you hope our listeners will remember?
I guess if I had to boil it down to one thing, it would be that planning for a loved one with special needs is not a one-time event, it's a journey.
So true. It's about creating a plan that can evolve with the person's needs, right?
Exactly. And it's about more than just financial security. It's about empowering them to live their fullest life, to pursue their passions and dreams.
Beautifully said. And on that note, here's something I want our listeners to ponder as they continue on this journey.
Yeah.
How can you use these tools, these strategies, not just to protect your loved one financially, but to open up possibilities, to create opportunities for growth and joy? It's a question worth reflecting on.
It really is.
And remember, you don't have to do this alone. There are experts out there, resources available, and we're here to support you every step of the way. Thanks for joining us for this deep dive.
Thanks for